I want to bring in James Liu, Clearnomics founder and CEO, for today's market conversation. So James, got some numbers today. Personal spending fell by 1% last month. How much do you see that as really a temporary move there? And what kind of boost are you expecting from those stimulus checks?
Hey, Kristin, great to chat with you. Well, we do think the personal spending numbers for today will end up being a blip on the radar. Essentially, bad weather last month, people couldn't get out, stimulus checks weren't distributed yet. There's a whole litany of factors that we think will basically turn around. And on top of that, you look at the longer term trend, retail sales have bounced back tremendously since a year ago when everything was on lockdown. And individuals are still today saving a lot more than they used to, around 20% of their household incomes. So, obviously there's a differential impact across different parts of the economy and different households. But overall, this over time should boost consumer spending over the next several quarters.
I want to talk about inflation right now because those fears were eased a little bit after the numbers for the personal consumption expenditures were released. Just a reminder for everyone at home, they jumped 1.4% year over year. So it's below that Fed target of 2%. Now, you say that the reflation trades actually still have legs. Tell us about that and really how that plays more into the longer term picture on inflation.
Right. Well, it's a bit tricky because we think this will happen in waves and in sort of short episodes and short bursts over the next, 12 to 24 months. Essentially, as we get inflation data, as the economy comes roaring back, as it has been, we will start to see those numbers come up. So I think that it's important to distinguish inflation, which is sort of a broad increase in prices across the overall economy, from reflation, which is bouncing off of a very low base from last year. Clearly, the reflation trade is happening. We're seeing rotations, not just because of the differential impact in COVID, but also just prices on a supply and demand basis coming back. We think that'll continue to take place. Over the long run, however, we really don't see long-term sustained inflation, especially of the sort that some are worried about, 1970s style stagflation. There are still many deflationary factors in the economy that are technologically based, that are based in globalization. That's the reason inflation's been coming down for decades. So it's this balancing act between the two where reflation will happen and is happening right now over the course of the next 1 to 2 years.
James, I'm not sure if it's just me, but I actually just lost your audio there. But I do want to ask you what short-term plays, reflation trades, do you think are worth being made? And do you see any short-term plays from the Suez Canal blockage that might be worth looking into for investors?
Wait, apologize for the audio. Hopefully you can hear me now. So we think that
That's good. We've got you back.
Okay. There are going to be disruptions in certain supply chains. That's very obvious. It's going to affect, certain industries. Right now, they're saying hopefully a week, but it could, the whisper is that it could take much longer. So the issue here is that it's going to be a short-term disruption to these supply chains, but it's not going to affect, so it could affect prices and therefore bump up the inflation data over the course of a month or two because of supply side constraints, but it's really not going to affect inflation numbers or demand numbers on the other side over the long run. So we think there will be a temporary impact in supply, but overall, we think that this will basically filter through the system over the next couple of months.
All right, James Liu, Clearnomics founder and CEO. Always great chatting with you. Thanks for joining us today.